Welcome to ES Gold. This is your weekly outlook for gold, XAU USD, dated the 22nd of June 2026. Today we cover macro, Fed policy, inflation, geopolitics, central bank demand, and every key technical level you need to trade this week. Where gold stands. Spot is trading 41.47 to 41.69, 25.5% below the January 28th all-time high of 55.89. The 200-day moving average was broken for the first time since October 2023. RSI is approaching deeply oversold. Short-term bias, firmly bearish. The big picture. Gold entered a structural downtrend after the January all-time high, a $1,400 correction. The catalyst was a 1-2 punch, re-accelerating inflation and a hawkish Federal Reserve pivot. The 200-day MA break is the most significant chart event since 2023. Despite this, the structural bull case remains intact through record central bank buying. Base case for this week, bearish to neutral. Heavy tape with choppy trade between 4,100 and 4,300. A break below 4,100 opens 4,050, then the round 4,000 level. Deeply oversold momentum keeps a sharp short covering bounce alive as secondary risk. Watch the dollar index, treasury yields, and any Middle East headline. Driver 1. Inflation. May CPI released June 10th ran hot at 4.2% year-over-year, the highest since April 2023. Energy prices surged 23.5%, accounting for over 60% of the monthly increase. This hardened the case for higher-for-longer Fed policy and was primary fuel behind gold's continued slide this month. Driver 2. The Federal Reserve. June 17th FOMC. Rates held at 3.5 to 3.75%, unanimous 12-0 vote. The hawkish dot plot was the real shock. Median in 2026 projection raised to 3.8%, up from 3.4. 9 of 18 officials project at least one additional hike. PCE inflation forecast revised to 3.6% from 2.7. Most hawkish Fed posture since the 2022 tightening cycle. Driver 3. Jobs and growth. May payrolls remained resilient, removing Fed urgency to cut. First quarter GDP held positive but below trend, keeping stagflation concerns alive. Strong labor market plus re-accelerating inflation gives the Fed cover to hike. Watch for any GDP downside revision or weak June jobs print as the most likely bullish catalyst for gold. Driver 4. Geopolitics. 3 risk fronts remain active. U.S. Israel-Iran. Earlier conflict drove gold to its all-time high. Re-escalation could spike gold $200 to $400 instantly. U.S.-China trade war. Tariffs from early 2026 support de-dollarization. Ukraine-Russia. A chronic safe haven driver sustaining central bank reserve diversification into gold. Driver 5. Central bank demand. World Gold Council confirmed 863 tons purchased in 2025, nearly double the 20-year average. Q1 2026 alone saw 244 tons of net purchases, putting 2026 on pace for another record. This persistent official sector buying is the strongest structural floor under gold and explains why 12-month institutional targets remain bullish. Now the technicals. Gold is in a clear downtrend, lower highs, lower lows since February. The break below the 200-day SMA at 44.12 and the 200-day EMA at 43.80 is the defining chart event. Gold trades $230 to $265 below the 200 MA cluster. This is a structural break, not a shallow dip. Momentum confirms the downtrend. RSI was 45.7 on June 2nd, deteriorated to 34 by June 10th, and is likely approaching or below 30 as of today. Deeply oversold. MACD firmly negative. ADX near 25 and building. Remember, oversold is not the same as reversed. Wait for confirmation before buying. Resistance levels above. First hurdle, 4,200. Then 4,300 to 4,350. The critical line to reclaim is the 200 EMA at 43.80, followed by the 200 SMA at 44.12. A weekly close above 44.12 is the first signal of a potential trend reversal. Above that, the pivot at 45.60 and resistance at 47.54. Support levels below. Critical floor, 4,100, your line in the sand. Below it, 40.50 to 4,000, the major institutional buying zone. State Street's base case lower boundary sits at 4,000. If 4,000 breaks, look to 3,800, the key long-term Fibonacci level. State Street's bear case puts the absolute floor at 3,500. Your complete trade map. 3 zones. Top red zone. Sell or short on rallies into 42.80 to 43.80. Stop above 44.25. Targets 41.50, then 40.50. Minimum 1 to 1.5 risk reward. Bottom green zone. Buy on holds at 4,000 to 4,100. Stop below 39.65. Targets 4,200, then 4,300. Minimum 1 to 2 risk reward. Current price near 41.58 sits in the amber neutral zone euro, not yet in a buy or sell, so wait. Wait for 4,100 to either break or hold before you commit to a direction. Scenario A. Bearish continuation, 60% probability. Gold fails to hold 4,100. Selling through the level opens 40.50, then 4,000. Trigger, dollar strength, hot data, hawkish Fed commentary. RSI can stay below 30 for weeks in a strong downtrend. This scenario is invalidated only if price closes back above 41.50 on strong volume. Scenario B. Oversold bounce, 25% probability. RSI below 30 at a major support triggers fast short covering. Gold defends 4,100 and bounces toward 42.50 to 43.80. Trigger, weak data, dollar reversal, or geopolitical calm. This is a trading bounce, not a trend reversal. Sell into it unless price closes above 44.12. Scenario C. Bullish reversal, 15% probability, but high impact. A major catalyst, Iran escalation, new US-China tariffs, or a surprise Fed dovish signal, drives a rapid move back above the 200 MA. A weekly close above 44.12 neutralizes the breakdown and reopens the door to 47.54 and beyond. Risk management. Event risk this week is elevated and two-sided. Keep size modest. Define stops before entry. Longs, absolute stop 40.95. Shorts, stop 44.20. Do not fight the tape with large risk. Wait for 4,100 to break or hold before making your directional call. Monitor the dollar index and 10-year treasury yields in real time. Catalyst calendar. Watch for Fed speaker commentary post the June 17th meeting. Dollar index, above 106 is bearish gold. Reversal below 103 provides relief. 10-year real yields, the primary headwind. Watch daily. And of course, any Middle East headline or geopolitical escalation could trigger an instant scenario C spike. The bottom line. Gold is in a confirmed short-term downtrend below the 200 MA path of least resistance is lower while price stays below 44.12. Line in the sand this week, 4,100. Macro backdrop, sticky inflation, hawkish Fed, strong dollar, favors selling rallies. But record central bank demand at 863 tons per year provides a structural floor. Trade the levels. Manage risk. Do not let conviction override the chart. That is your full gold outlook for the 22nd of June 2026. If this analysis helped, please like, subscribe, and turn on notifications so you never miss an update. This is for educational purposes only, not financial advice. Trade safe, protect your capital, and we will see you in the next one.